Afternoon. How are we all doing? Afternoon, Steve, Harold, Burke, JC, Freeman, Virginia, Fletch. How you doing? I'm having a very large coffee. Look at the size of that coffee. Espresso wakes you up. I'm just doing a quick back test on. Oh, hello. There we go. So I'm just doing a quick back test on this ORB strategy that was in that research paper. I've built the EA, so I'm just testing it on the DAX. They didn't test it on the DAX, so I thought I'd test it on the DAX. So if it works on the DAX, I should suspect it works extremely well on the NASDAQ. But I'm only 3 months into testing so far, and it's up from 100k to 172k, so not too bad, is it, in 3 months? But obviously, as you can see, has large stagnation, as everything does with 5-minute strategies. There's lots of ways to optimize this. I've been watching this for the last 2 hours. Not this fast, obviously. I've been going through it trade by trade. There's a lot of optimization options on this that I think could really do well. Oh, no, that wasn't 3 months. Hang on. Test. Oh, that was a year. Blimey. Was it? January, February, March, April, May. Oh, yeah. So netted 48, 50% return off of a 30% drawdown. 23% strike rate, which is what they said. 25% was the strike rate. But there are ways we can increase that. Interesting. Anywho, it's my life gone for the next couple of weeks. Right, EMAC, afternoon. Harris. Finally, some New Zealand dollar movement. So yeah, Aussie New Zealand. I've just added a second aggressive drawdown control position to Aussie New Zealand. New Zealand dollar, US dollar, ADR. That aggressive. So this, I don't want to look at it. To keep looking at it. This stop out that they did. Still can't bear to look at it on me this morning. That cost me 1.5%. I added it straight back on again. Obviously, that was not a stop out, so I'm not 1.5% down yesterday. I should be 1.18% up yesterday. So I've added that on. I've added another one on just to say screw you, and I'm going to hold it. I'm going to run for some profit. So it's on its way down very nicely. So hopefully this is the start of the profit take move. We'll be looking for somewhere around a 38 to 50 retracement. So that's 23. That's 38. If I can get this position and this position, so you can see it, I really must move my head. Where should I move my head to? Put myself somewhere better. So if I can get those two positions, I'm going to take one off at 23. If I can get the second one, I think it's that top one. If I can get that second one back down to a 38, that gets back 13% net. That 13% net obviously pays for all the drawdown control and puts it back into profit. We'll see what happens. But it certainly looks like the profit take's underway. This is what we would usually expect from a profit take move. The market stalls, series of lower highs going, and then all of a sudden we get a move start. And as soon as that move starts, the market sees the move start. So they start to move with the move. Everybody starts to move, and you get an ADR hit to the downside. So it's all starting to move. I'm going to try and hold it. So these two aggressive drawdown control positions I've put on. We've got 3 minutes to the open. One there, one there. So basically, if you think of these two aggressive drawdown control positions as a individual position within a position, the average on these two is here. So in theory, if we hit ADR today, yeah, the whole trade is in profit. What I can do is I can move the two aggressive drawdown control positions to have stops there. Yeah, which means that these two positions here are completely risk-free. If the market was to push back up, it would stop them out at break even. I would lose absolutely nothing. If it continues to drop down, it's going to bank 15%. This isn't something I normally do, but the fact that there's been so much DD control and so many aggressive drawdown control positions that have been taken out on this one, I'm feeling a little aggrieved by the Aussie-New Zealand, so I want to get my own back. Revenge trading is bad, except when it works. Afternoon, Michael, David. But do what you want to do, dependent on your portfolio. Afternoon, Neo. Right, so this morning's DAX, still running this test, by the way. There's 1,000 system parameter permutations going through, 600 in so far. Out of those 600 system tests so far, 600 are profitable. So all profitable still, which is fantastic. So every single parameter permutation test I'm running is making money. So I'm leaving that running. DAX this morning, ORB, perfect. Pre-market ORB, not perfect actually. Hideous, whipsaw, death. Inside bar, breakout, re-entry. Spot on, bank to grand. So we're in profit for the day. So the pre-market ORBs on the US indices will obviously get taken, and depending on what happens with these, obviously, if we get a little bit of profit out of them all, that'll be it for the day. We'll see how these go. We've got 50 seconds to the open. So news this morning, we had this afternoon, we had the Canadian unemployment, all negative. Everything's gone off, as you would expect. There's ADRs all over the place as well. So we will have a look at the ADRs and everything in a sec. We just wait for the market to open, but basically, obviously, the Canadian dollar had a rally to the upside. Dropped on the negative figures. It is pulling back at the moment. So we're having a little bit of a pullback on this initial drop on the CAD. So we'll see if that gets sustained this afternoon, but all negative. Markets opened. NASDAQ missed its entry. Slippage. Wow. Slippage is awful. So TP on, trailing stop hit on the Dow. This has all happened way too fast, isn't it? Let me unpick this. S&P TP'd, trailing stops kicked in at $800 profit. US 30 Dow stopped out on trailers on the longs. NASDAQ missed its entries completely. Dow flipped short. Whipsaw, look. That's annoying. Why did that not get placed? This obviously moved far too quick. It didn't even place a limit order, though, which is the worrying thing. I just need to quickly check the logs on this. Invalid stop loss or TP. Retried multiple times. Invalid stop loss or TP. Wish it would tell you which. Market just moved too fast. Couldn't get the order on. Problem. Nothing you can do about it. So we'll see how that plays out. But that would have been, if you'd have got that on, which you haven't. Well, I haven't. I don't know if you have. Anybody? If you got that on, it's hit TP. So NASDAQ TP, S&P profit. Dow one stop out short working. So we're looking for a breakdown to there. So if the Dow goes down to target, that'd be a profitable session. Bit of a mess, that one. Still, 1100 up. It's all down to the Dow Jones. So your TP on S&P is you're up to 4R already on it. But, yeah, didn't get it on. Shame. Real shame. Never mind. Real whipsaw on the Dow. That looks like that's going to be a double-ended stop out. So it's interesting. I've been playing with this new version of the EA with and basically what it will do, it waits for this candle to form and then takes a trade based on the direction of the first opening candle and also based on the size of the body of the first opening candle. So I'm using anything that is a spinning top or a doji. It won't trade. So I've been observing it, and basically these whipsaws, if you wait on these whipsaws where it paints as it's going to here, we've got 1 minute left, it's not finished yet, but if this paints a spinning top, obviously there's no directional bias, so it's basically opening cash balance, no advantage. Those breakouts quite often are extremely violent when they actually breaks that initial 5 minute opening range. And as I've been watching this other EA variation trade this initial move after, so for example this one here, it would immediately place a long as soon as this candle closes. Same with this one, it would go long. This one, if it is a doji, it would wait. Then you could take the 5 minute ORB, and the 5 minute ORB is often very profitable if it paints a doji or a spinning top. So it's really good watching this new version trade, because I'm spotting lots of similarities cropping up over and over and over again, because it's programmed not to trade if that is a doji. And every time it paints a doji, you get a huge breakout. But you don't get dojis and spinning tops often, because normally you get a move at the open, which it seems today we're probably not going to get. We've got 10 seconds left on this candle. So if this candle was to close small like that, the 5 minute opening range break should be a good run today. We'll see. Market's frozen there. Good old market frozen. This happened yesterday, didn't it? Just as the 5 minute candle is about to close, we freeze. Something not right. My ECN is not doing this. It's this demo server that's doing this. Look, different server, absolutely fine. Froze. Just goes to show you, doesn't it, how important your equipment, your terminal, your broker connection, everything is to trading. We're talking about within 3 seconds, you could be from there to there. It could cost you $1,000. It's critical that everything is working. At the moment, the EA physically cannot trade the strategy that I've just been testing because it's not working. The terminal's not working. However, if I was trading on this account, I would have no problem executing that order. Right, so there you go. So there's the 5 minute ORB. Yeah, so because that is a spinning top, there's no directional bias. There's no trade direction. So you take that ORB, whichever way it goes, and you hold it until the end of the day. And you close that out at the end of the day. That's the strategy. I think that would work extremely well. So watch that 5 minute ORB today. There we go. Now he decided to come back to life, but it's too late. It's going to cancel all those cells off. Is it? I don't know what it's going to do. I've no idea if that Dow stopped out or not. And I've no idea how that's going to fill that order either. This will be interesting. So apparently that order there has already stopped out with an $800 loss. Got to change this broker. Got to get rid of this account. Just not working. However, this is working absolutely fine on the VPS. I haven't got this running on the VPS, actually. There you go. Right, so that's stopped out. So this candle here, there's your opening range. So this candle here is going to close as an inside bar. If it closes an inside bar, we're going to take a break of this. And that should hopefully be the run of the day. So we ended up 304. Oh, it's not going to trade because we're in profit for the day. There you go. So that's the end of it today. We're in profit. So damn, we only made $300 today. So we're not going to get to see any more trades. There you go. Do what you will with that one. Right, let's have a look at FX. Now that's over. Now this terminal's frozen. Give up. Afternoon, Crom, Baggy. I have 3 buy trades on New Zealand dollar CAD. Nice push up, but need continuation to go into profit. Yeah, New Zealand dollar CAD is working very nicely. Big push up. Obviously, Canadian dollars dropped. So yeah, again, profit take move underway. We're looking for a move back up into propulsion potentially. So peak formation low. We had that push yesterday. They're adding to the orders. So again, stick your fib on. Have a look at where you're potentially going. The entire move is... What the hell have I done with that fib? The entire move is there. So the 23 retracement is done. The 38 retracement is above that propulsion gap. 50% retracement is back there. Obviously, assuming that is going to be the way we're going to go. The way this Canadian dollar is going and the way oil is going, I don't hold up much hope. Interesting, isn't it? Canadian dollar tanks on Canadian dollar news, oil tanks. Wanted any more proof those two are interlinked? There you go. Frozen Friday, yeah. Slippage. I don't know what that was. That's really annoying, that is, because that was a TP as well. That just went straight to 5R. So missed $3,200 there because of execution. What I'm going to do, I think, is I'm going to open another ECN, and I'm going to stick $500 or something in it just to live test this on a live ECN. Because this terminal freeze and this order execution issue, I need to verify this on live. In fact, what I might do is just open my Forex funds evaluation and try it on that. Just to test this. So, well, they all broke. So that new strategy that was in that document that I shared yesterday, the strategy is after the opening candle, if the opening candle is green, which is that one, yeah, you go long. So these would all be just simple long entries now. And you just hold them until the end of the day. Literally that simple. Either a 10-to-1 R or 5 or 6 or whatever you want, but whatever you want R, and off you go. There you go. Anyway, I live for the three. I live for the three. For the day. I live for the day. 3 seconds means $1,000. Yeah, proper count. That could be tomorrow. Well, Monday. Afternoon XR update.news. 38 will do me. 38 what? Dollars? I've had to reconnect a half dozen times today for some reason. What's that to, Brian? What broker? Or is it terminal? Is it your terminal you've had to reconnect? I don't know. I've never experienced this before. This much disconnection. And the thing that's confusing me, and I really need to track the root of this problem down, is it's not. This terminal froze. We switched over to this one. This one wasn't frozen. My ECN is not frozen. My Forex account is not frozen. Then all of a sudden, this account will freeze when this one doesn't freeze. So I don't know whether this is terminal related, PC related, or account related. I can't figure it out. But something is locking up somewhere, and I really need to get to the bottom of it. The VPS, as far as I'm aware, has never had an issue with this connection, because you can check the logs, you can check the journal. Look, ping failed there. Look, for literally 400 milliseconds. Yeah. Connection failed. 400 milliseconds. Yeah. So I'm not worried about a 400 millisecond disconnection. What I don't want is that. Because when this is frozen, the EA is unable to execute. And if this happens like that did there, 4 seconds before that candle is about to open, that is exactly when the EA is going to execute its orders. That's the day gone. That's the difference between making $10,000 to $15,000 a month or not. And it's imperative it works. It's not an option. So I need to figure out what it is, because it's driving me up the wall. That trade there is 5R. Straight up. 1.5 R hit, no pullback, 5R. $3,250. Not in my account. Well, it wasn't in this account. This is a test account. But no, up the wall, isn't it? There you go. So there's your RB long. That's yesterday's high. So watch that level on the Dow. We should have a look at the Dow, see where it's going. Yesterday's high. What the hell's going on with this? Why is it drawn? I think it's this terminal, but I changed this. This is a brand new terminal. I really do not know what the problem with this is. This is a new installation. I reinstalled it because I was having issues with it. I reckon it's this account. Something to do with this demo that I'm running, so I might change it. Anyway, so on the hourly, we're running up into yesterday's high right now. So watch for this rejection. So there's your 15-minute opening range in. So it's rejected at the high from yesterday. Massive propulsion gap targets to the downside at the moment, which is 150 ADR. So we basically pushed up last Friday. Since then, we haven't managed to really make a new high. We've pulled back, accumulated, rallied up slightly. So this is a push straight up into there, potentially rejecting that level. So if that level rejects, we've got nowhere to go but all the way back down and retest these lows. So watch this today. This is a really good opportunity for a short. If this paints an inside bar here, I'd be looking at a pending short on that, stop above the high. If you grab that top and that does turn out to be the top, you've got a huge risk reward trade on your hands there. Pound Swiss, ADR. There's a load of ADRs. Let's go through those now. Oanda, that is it? Using Panda on my terminal. Oanda. Aussie US did well overnight, yet suffer freezing more than usual lately as well. Wonder what it is then. Why is everybody suddenly freezing more than usual? Weird. So ADRs today, there's a lot of them. So Aussie dollar Swiss. So my terminal half an hour to update. There you go. Dow's rejecting that high. Right, so that is potentially higher day, rejection on previous day's high. May or may not be, don't know, but obviously it's not a bad place to take a short. So Aussie dollar Swiss straight up into ADR. We're coming up to 125, also coming up to yesterday's previous day's high, sorry. So this is the previous day's high. There, that is yesterday's high. I think I'd be better down in the bottom. Let me move myself a minute, one sec. I'm just going to try this down in the bottom. Is that better? Oh, don't do that. Oh no, I've ruined it. Hang on. There we go. Right. The trouble is now the alert box is going to appear over my face, isn't it? But anyway, there you go. Because I'm constantly talking about this because I'm looking at highs, aren't I? So, but then obviously every time I'm starting to look at lows, you're not going to see those, are you? I can't win. Anyway, so highs. That's yesterday's high. That's the previous day's high off of there. So, and obviously this is ADR 125. So really good spot potentially for resistance to pull back on that long move. Obviously it slams straight through all these propulsion gaps on the Aussie Swiss. So that's a good looking ADR reversal. Swiss franc weakness. Aussie dollar is not particularly, Aussie dollar is fairly strong today, isn't it? Not as strong as a New Zealand dollar though. So that's a good looking opportunity for a short. Aussie dollar yen, that's pushed up to ADR as well. It's just not going to work, is it? Not painting the charts. I'm going to have to go through every pair and wait for it to load data. Why is it just not automatically loading data? You ready? There we are, up at ADR. So obviously good opportunity for shorts on this one. Back down into that area of support, I would say. Previous resistance. That has already turned into support once. Propulsion gap there where they bought out of it multiple times. So back down into there for a range. So wait for a reversal. Aussie dollar yen. Yen is very, very weak today, obviously. So think about the yen moving forward. They've just weakened the yen, so it might move up. Euro odd. That one's come off of a DR. No, it hasn't. Half an hour later, we'll paint. Gavin, I can't say thank you enough. Been trading H4 30 minute for 3 weeks with a friend. The amount of blue profit trades is more than I've ever seen in 5 years of trading. Excellent. H4M30, eh? Never traded the 30-minute charts. In theory, they should be just as good as the 15s. There we go, bounce off of ADR. You just had a reversal alert on that one, which will draw in eventually. So there's your entry. Loads of propulsion targets to the upside on this Euro odd. Put yourself in the range. Yeah. Cyber warfare, internet AI becoming aware. Yeah, I don't think it would want to sabotage my stream, would it? Euro New Zealand. Wait for it. Oh, it's updated. There we go. 125 ADR on Euro New Zealand. So that one's a little bit more extended than the rest because the New Zealand dollar's had a big rally today, which is great for the Aussie New Zealand. So that's coming down. It's weakening off a little bit now, but if this is the start of a move, we should just see a pullback and drop. Therefore, you can take that pullback. So Euro is obviously bullish as well. So if the New Zealand dollar has a little bit of a rest, we should see some Euro strength, although that is not happening at the moment, is it? So we're waiting on the Euro for a little bit of a strength move. Lagarde has been talking it up, but the market's not listening. So next news we've got euro is the rates, which is Thursday, isn't it? So there's your refinancing rates on Thursday. So that should rally the euro when we get a positive there. Mind you, last positive we got to 3.75, they tanked it because they were expecting 4. So as long as they haven't factored in 4.25, when we get that 4, we should get a bullish move. Blame the market. Pound Swiss, so good opportunity there as well. Pound Swiss, pound CAD. Hit to the upside on the Swiss franc weakness. Thinking about it. Just taking out the highs again on the Dow. So watch that low for a break. Pound Swiss, there we go. So rejected off of 100 ADR. Straight up, your reversal is just about to go in. So the last down candle before the high was the candle that caused the high. So not a very pretty reversal alert, but big, strong push up. May get some Swiss franc weakness coming through. So that's ADR hit on that one. So that is pretty good for a reversal. Not the greatest level in the world. I suppose it's just filled all the propulsion gaps there. But we got that previous high up there at 150 ADR. We got one there at 125. So this may be just taking out the high from yesterday and pulling back down into the range. So they'll be selling yesterday's high on a 50% retracement. Possibly, but this is just completely undone that Swiss franc weakness that we had. Sorry, that Swiss franc strength that we had. So short opportunity on pound Swiss. Pound yen. Painted, well done. That's flying at the moment. Real yen weakness. Good strength on this pound as well. So you're not going to get a reverse alert on that. It's absolutely miles away. This has gone parabolic. So really difficult to get into that one. Forget that. New Zealand dollar CAD. That's the one we looked at this morning. That's come straight down off of ADR, look. Immediately. So weakness coming through on this New Zealand dollar now. That is just about an ADR. So this big candle we had down this morning, that actually came down and retested that level. So that is a proper ADR hit. Nice M pattern reversal on that. Reversal alert's done its job there, look. Nice M pattern painted. Short. Go for a third to half an ADR. New Zealand dollar Swiss, same sort of thing. Basically just about to get a reversal alert on that 125 ADR. That's just about to trigger. That's also a previous high from the previous, from yesterday rather. So that's a weekly high. We're just coming up to tap into yesterday's high. So yeah, some kind of pullback on this. If we're not going to do an A-shaped recovery, we'll look for some kind of pullback before the next leg up. Obviously, third to half an ADR is all you're after with an ADR reversal. Getting into that one in a second. New Zealand dollar yen. So this is the big one today. Obviously, we've had this massive rally on the New Zealand dollar. UEDA weakened the yen overnight. So this has obviously gone parabolic because we got New Zealand strength with yen weakness. So this is obviously the one today that's gone way further than everything else. Just about to get a reversal up there. You would have already had an entry on this New Zealand dollar yen. There. So it's in one already from this morning, which is in 0.25% drawdown at the moment. So the initial reversal alert would have been there. And obviously it's just pushed up since then. So next reversal alert, it's a bit close to take a second on it. Half an ADR. So that is roughly half. Yes, that's less than half an ADR. So I probably wouldn't take a second on it. But if you want to, if you got it on the first one, that's actually where the I see where the signal would have been. That high, that low, that one. So that would have been your entry there. So actually, that is half an ADR. So if you wanted to get in on half an ADR, which is what the ADR reversal one is set to do on my server anyway, one entry there, second entry there, average there. If we get a pullback down into this area, you'll be out. New Zealand, US. Can't tell if that's updating. No. Wait for that to update. Wait for it. Peter, Robo Forex demo account for me struggling to load data on time frame changes, etc. Sits at the start of the day for a while. This is exactly what this is doing. Exactly. I'm not sure why. I'm wondering. Yeah, I don't know. Really don't know. So your reversal that's just gone in on New Zealand US as well for a potential pullback. So there's all your ADRs. There's quite a few ADRs there. Obviously, a lot of this is based off of New Zealand dollar movement, which is all very, very nice and strong. Euro New Zealand, Aussie New Zealand's undoing itself. If you could just stop that, that'd be lovely, because I really don't want you to do that. We've got two highs here, potentially acting as a resistance zone in this propulsion gap. So this is the accumulation break. That's the propulsion gap I would expect this to push back down from, which is previous support, which will turn resistive. Hopefully. Fingers crossed. So my average on these two, there, above that propulsion gap. So the two aggressive drawdown control positions I've got on, that's my point of no return, really. That takes me into drawdown on the aggressive move. So we'll see what happens. Hourly, though, look. Exactly what we had previous. They bought the thing back up again. They bought the thing back up again. They're buying the thing back up again. But they could not get back up. So we're still making these lower highs, except there's still a lot of pressure to buy this. So we'll see. But that's not, it's not a pullback at all yet. We've got two massive propulsion targets now on this thing, but that's obviously the most recent, back down to there. That's where I would expect us to get back down to. But obviously, we've got the original New Zealand dollar news event all the way down here. We'll see. There is no fundamental advantage on either of those. Right, we've got a few ADRs, a few RSIs to look at as well. See where those breaks have gone. Yeah, all gone long. Look, beautiful today. What a shame. Just got taken out on the trailers and whipsawed. If we hadn't have had a whippy open today, this has been a 9K day, 10K day. But whipsaws, and whatever that issue was. I wonder if I couldn't get the size on that. $69.94. So it wasn't a size problem. Okay, so it wasn't a size problem. I was just wondering if maybe the size that the EA was trying to get on, because that's a fairly tight range, I'm wondering if it was too big, but it's not that. That's the other thing that's coming out in this testing that I'm doing. Look at the size of these lots going on. 312 lots on that trade. Because obviously I'm risking $500 on a trade on a fairly small range there. So we're getting in with big lot sizing. Some brokers limit that to 200, so you wouldn't even get the position on. So there's a few issues with this strategy cropping up that you might find on live terminals. Actually, you're not going to get those orders on. So I want to try and trade this live so that we can see whether or not there are pitfalls. We're finding pitfalls live testing, aren't we, with it? So I just want to check we can actually get some of this lot sizing on as well. Afternoon, Dreska. I assume the article refers to end of day as New York close. Yeah. So for the DAX testing that I'm doing, For me, end of day for the DAX is 2 o'clock, which is New York Open. So New York Open, I would class as New York close. Frankfurt close, I would class as New York Open. I haven't tested it with New York close time. So that's another test to do. There's lots of testing to do. But yeah, you could use either or, really. Banked 579 on the ORB pre-15. Excellent. Good job, Harold. £157 from passing a 20k challenge. Good man. Afternoon Tamo. Right. ADRs, sorry, RSIs. 4 hours Aussie dollar yen. These charts won't take hours to update. Just turn that volume down. Don't know why that's so high. Aussie dollar yen. So nice extension on the Aussie dollar yen. We're embedded. As we know, Aussie dollar has been really, really strong. I've got 2 positions on it from the hourly. I can draw over here now and it doesn't matter. I'm only blocking the RSI. So actually, when I'm looking at support resistance, I'm just sitting on the RSI, aren't I? So that's actually not a bad place to put me. So yeah, nicely extended. We got an ADR hit on this one. We're extended again on the 4 hour. Not extended on the hourly, but we are very close. In fact, this candle probably will take us to just about a 70 extension on the RSI. Sitting at 70.21, so wait for the candle close, which is another hour away now. But yeah, very nicely extended. We haven't really had a decent profit take move since we started this, so we've gone parabolic. We sat there at the highs, thought about it, and then continued to move up. So there's been no profit take move whatsoever on this. So again, you stick a fib on this. When we do start to take profit on the move, we're going to be looking somewhere around about 23 for a flag, 38 for a decent pullback, 50 for a nice deep pullback, which brings us back into there. So I would expect when we start a pullback on this to come back and retest these highs, and they will act as support potentially. So where the average is on this one at the moment, obviously, move back down into here, takes it nicely into profit. Probably will get another one on here. If you look at the distance, should get another entry there, which will bring the average all the way back up into there. So any kind of pullback at all gets out of the position. Only 2 on it at the moment, but that's extended on the 4 hour. Aussie dollar, US dollar, extended on the 4 hour. Same thing with this one. Parabolic. All the Aussie dollars have gone parabolic. Everything is just, at the moment, this is total worst case scenario for everything. All the Aussies have gone mental. All the US pairs and the Euro pairs have all gone to pot. And it's all happened at the same time. It's just a bizarre scenario because all the news we've had points the opposite direction. However, the market has completely reacted in the opposite way. It's totally out of character for this type of movement to be happening off the back of these rates. You don't get interest rates going up and markets tanking. And the Aussie has had its interest rate go up and they decided to pump that. There's absolutely no logic in the fundamentals at the minute. It doesn't make any sense whatsoever. I think it's the US screwing this up because the market doesn't know what to do with the US. So it's just gone out of sync, isn't it, with what's going on in the world at the moment. Aussie Swiss 125, that's still pushing. Coming up into previous, that's yesterday's high, isn't it? No, that's previous day's high, sorry, just coming up into previous day's high. Aussie US, so that's still pushing. 4 hour, back up there again. Coming up into propulsion on the 4 hour out of this accumulation. That ADR, so ADR would be a good place for another short on that one. Again, same thing, push, flag. Yeah, if it's going to be 3 pushes, that will be where we start our profit take move. So, you know, similar sort of thing to this. Just waiting for that. That's going to go like that. And we're waiting for that. Euro odd. That's come down to previous. That's the week's low, isn't it? There. It's previous. Yeah, so it's previous day's low. We're just testing at the moment. This is also ADR. Again, Australian dollar strength. Euro interest rates going up. Absolutely illogical. So yeah, we're waiting. Sorry, that was there, wasn't it? Interest rates going up. So we've got the next interest rate rise for the euro happening next week. Rise. Yeah. So if this does continue as it's doing at the moment, as long as we get that 4% on Thursday next week, we will see some strength in this euro. I said that there. For some reason, the market decided to tank it on the interest rate increase. So we're just waiting on the market to wake up and go, actually, yeah, right. I think this was a complete overprice on the euro. They were expecting 4 and got 3.75. Now they're expecting 4, and if they get 4, we will get positive movement. If they get 4.25, it's going to go through the roof. We don't think we're going to get that, but wouldn't that be nice? Yeah. So hold on to it. Euro odd. Pound yen. Obviously, the alternative is they decide, actually, we're not going to go to 4 and the market's going to collapse even further. But they're not going to do that. They can't do that. We're not that stupid. Pound yen extended on the 4-hour. So we just got back up there after that rise there, pull back. We had an extension there. Obviously, you can see that entry there. That was a nice little trade. We had another one there. That entry is the one that I exited. Since then, we've just done an accumulation push. Yeah, so hopefully this will be the last move down. But this is obviously a bullish pair. Everything's bullish against the yen from a fundamental perspective. There's no reason why the pound shouldn't be rallying as well. So obviously it's not the greatest short in the world, but it should pull back. As long as you're getting a pullback on it each time, you'll be fine. That accumulation wouldn't have helped off of that first entry. So that one there that I exited after 4 days because it hadn't gone anywhere, you'll still be in that one. So you'll be in 2, probably 3 entries on that at the moment on the pound yen. And pound US dollar rallying. So there's an H1 RSI extension entry on that one yesterday, or was that this morning? That was yesterday off the back of that ADR hit. Still rallying today. US dollar's coming down with the Canadian dollar, as it always does. We just tapped into the monthly high and rejected. That's that previous month high there. So we just had a little bit of rejection off of that. Not a great level, that. I'll be looking for it more to come up to 150 ADR. So this is pretty sideways. So any kind of pullback on this, you're going to get out. It's just very, very orderly. Yeah, so easy short exits. Just pound US dollars, not really got any real strength in either direction at the moment. It's very, very rangy. And every single day is like up, down, up, down, up, down, up, down. So you can see pretty much every entry on this one. Look, last, 3 entries. In, out next day, in, out next day, in, out next day, in. This will be the first one we haven't got out on next day. Probably 2 or 3 days. Yeah, so just wait. But it's extended on the 4 as well now as the hourly. And that is your backup level. So entries up to monthly high. We should see some resistance at the highs. Hourlies, you've got euro pound. So that's nice. Just about to get extended on the 75 on the hourly. This one again, euro next week. Pound is bullish. So this one, there is a reason for this coming down because of the bullish pound, but obviously the euro will power up. The euro will knock the pound for 6 if it does get that rate increase. So, which it will do. So where we are at the moment, we're just waiting for some kind of bullish pullback. It's been a bit nasty on the way down, this one, but you can see the entries and exits. There's been multiple entries and exits on this. All bullish, look. All buys. In, out, in, out, in, out, in, out. We'll be getting in shortly. Yeah, it's always moving like that. These two, very low ADR. It's a 37 ADR. Doesn't move very much, and it's range bound a lot of the time. So any direction you like with that. Euro New Zealand. It's an ADR hit to the downside. Just be a bit careful with this. I think there's a good chance the euro dropping before it gets there for next Thursday. That will require the New Zealand dollar to continue this move. So we don't know if this is just a one-day wonder on the New Zealand dollar or whether we are actually going to see some strength coming through. It's well overdue for the New Zealand dollar. So coming back to fill this propulsion gap is on the cards for all the New Zealand dollar pairs, Aussie New Zealand included. So we'll see. But there is a long opportunity. You've just had the reverse alert on that one off of ADR. So we'll see if we get that pullback before a continuation short. Pound yen we've covered, pound US we've covered. The rest of them are New Zealand's. So obviously all of these New Zealand's, they've just had a reversal on them, but this is a big strong push today from the New Zealand dollar. So these may well continue. All got hourly extensions, only just though. I wanted to get a little bit further before I'd get interested in getting into these. We are at a really good weekly level here. We've got that previous weekly low, which we haven't tested yet, potentially for some limit orders to go short. Can't see that yet. So I'm just trying to, I have to remember I am here. So anywhere I draw now is good, isn't it? Unless I'm talking about the RSI back there, which if I put myself over there, we're going to cover it when I do other stuff, aren't we? So yeah, New Zealand's on a Swiss, good looking short. New Zealand dollar yen, same. However, this New Zealand dollar rally might sustain. So be careful. Just had a reversal alert there. But these are all ADR reversals as well. Yeah, so all these New Zealand dollars that are H1 RSI extensions, they are also ADR hits as well. So if you're taking them as ADR reversals, you'll be looking for a third to half an ADR profit. If you're taking H1 entries on RSI extensions, then you'll be looking for a little bit more, half an ADR, possibly plus. So up to you, but these are rallying hard. We are expecting some New Zealand dollar strength, aren't we? So we're getting it. We've been waiting for it for a long time. We're finally getting it. This thing's driving me up the wall. We find ourselves back up here and give up. This thing's just not able to get any strength. So we've got that New Zealand dollar. This is the trouble with this pair. It's a horrible, horrible pair, because when you get New Zealand dollar strength, you get Aussie strength. So the New Zealand dollar rallies, as soon as it has a rest, the Aussie dollar doesn't stop, and it just drags itself back up again. You can't get out of this thing. It's nasty. It's exactly the same as the previous squeeze we got into last year. It just couldn't get itself out, because it's the same as the euro pound and the US dollar CAD. They both move together. So you get strength on one, the other one gets strong, which means that you get stuck. So one of them has to be a little bit stronger than the other for you to get any kind of movement. And then the movement is small, which is why the ADRs, 68, 39, and they're tiny. We got 58 ADR on, 68 ADR on US dollar CAD. Euro pound is the other one, 37 ADR. Aussie New Zealand, 68 ADR. They're all tiny little ADRs. No movement. All pushing and pulling against each other all the time. DOW, 5-minute ORB. There you go. So this is exactly what I was talking about a minute ago, yeah? When you get one of these as the open and it turns into one of those, the move that takes the break of that 5 minutes, I've just witnessed visually backtesting this other strategy, tends to be a big run. That's an exact example of what I've been seeing. Hold it, because these things will go 10 to 10R. Really good. It's a great signal, but you don't get very many of them. Doesn't do this often. You usually get some kind of directional bias on the 5-minute ORB because it's the cash balance, and we've got usually a direction off of it. So these ones tend to be really good. Look at it go. Don't want to get out of these aggressives, but I'm going to. I'm probably going to take a little bit of loss on them. I'm going to wait and see what happens around about this area. So midline in this area, I'm just going to wait and see if the sellers step back in, if we get some bearish movement out of this area. If you look at it on the hourly, it's this propulsion gap. Oh. Not looking at 15. I must have been looking at 15-minute before. So that's the move that really kicked off, and that one there. So if we don't get some selling out of this area, we run the risk of coming just straight back up to there and sitting there for the weekend. So I don't really want to hold them. So I'm going to give it another hour or so. If we're not back down again in another hour or so, I'm going to close these aggressives out. I'm not holding them over the weekend. I've got no stops on them. And after what happened yesterday, after that stop out on absolutely nothing, I'm not really willing to hold them with stops over the weekend. Too dangerous. XR update.news. Whoops. Manipulated conspiracy? What's a manipulated conspiracy? Everything's manipulated. That's what the banks do. It's their job, manipulating currencies. I started off, when I started off trading, like looking at the markets, people said, oh, they're all manipulated. And I was like, then after a while, you look at it and go, yeah. But it's not manipulation. It's business. That's what the bank's job is. The banks have market maker desks for a reason, because they need to make a market. And you cannot make a market without manipulating the market. So it's legal, 100% what needs to happen for this market to move. If it wasn't manipulated, we wouldn't go anywhere, would we? Just lie. This is why it's so hard to implement any kind of strategy with any historical pattern recognition, because it's manipulated. You're never going to get the same pattern again. Similar patterns, but not the same. Almost another 3R on the first 4-hour EU today, Brian. Good one. Yeah, nice move down there. 210 pips off of a 92. Or whatever you took, but yeah, looks good. So break there, yeah. Very good. But you backtest it, there's no edge in it, is there? It's not profitable over time. It's profitable every month. The same as the ORB. The ORB has an edge over time. This doesn't seem to have an edge over time for some reason. I haven't backtested it anymore, but you need to backtest. Don't backtest over 3 months, backtest over 3 to 5 years and prove that this works through all market regimes. If it doesn't, you need to scrap it, because you'll get winners. Obviously, every strategy has winners. Every strategy has losers. When the losing runs outweigh the winning, that's when it's not worth trading. So you'll have good trades on it like that. And the one yesterday was absolutely amazing. For those that don't know, Brian's trading the 4-hour Asian candle break. And it works very, very well. When it doesn't, that would have been lovely, but depends if you'd have taken that second one. You probably wouldn't, would you? I don't know. Franco, so all in all, a good day to just hit the taco stand and go to the pub. Yeah. It probably is. It's Friday afternoon. Friday afternoons are usually quite quiet. Obviously, they're not on the indices today. So big old breakout of that yesterday's high again. So Dow's on a runner. Back up into propulsion. And we got that propulsion there at ADR. So target will be last month's high as your next stopping point. Now we're out of that high. But we're just in this big old range at the moment. So we need to see if this is going to be a range high and we're going to trade back down, or whether we are back into a bull market and we're going to pull back and go. Certainly looks like it at the moment, but I would suspect we're going to come down and test those levels at some point. We will see. Right, anybody got any other pairs or anything they want to look at? Because that's kind of me done for the day. I'm going to get on with some more testing. That's so annoying. Missed that. Turned $1,000 day into a $300 day. That would have turned it into a $3,500 day. I really don't know why it didn't get that trade on. It's the only downside. It doesn't tell you why something didn't happen. Invalid TP or stop loss. Thanks for that. Why was it invalid? And was it the TP or the stop loss? Why was it invalid? Just doesn't tell me. Absolutely useless. Overall, this account's doing all right. I can't remember how long we've been testing this for. Only this month, isn't it? So it's this month. 16 grand this month, not bad. Considering this is a development version. Thanks, 16 grand in 9 days. I'll take that. Steve, GJ. Getting a little bit of pause on the Dow. 1 minute left on that candle. So yeah, pound yen, we've got this as the ADR today. We're just extended on the hourly as well. So potentially this is coming down from here. However, this yen is obviously weak. So this has been an uptrend for a while. But with what Ueda has just come out and said about the yen, I suspect we might get a few days of weakness on the yen. At least until we get that 140 retest on the US dollar yen. However, if the US dollar keeps getting bad news along with the Canadian dollar, it's never going to get to that retest. So it may be that they don't need to power it up, which means the currencies which are bullish, like the euro and the pound, will continue to push against the yen. So it's a tricky one, that one. But it is extended on the 4 hour. It's extended now just about on the hourly. It's not quite got the 75 extension yet. But nice reversal going in at the moment. So it's a good little short, potentially, but you're not going to get into it today because this parabolic move, you're not going to get a reversal alert on it, put it that way. So if I was going to take an entry on this, not using the indicator, it would be on that low. That candle that's just closed, literally, would be, right, let's have a crack at it there. Go for a third of an ADR, which would be 45 pips. So yeah, just playing it back down somewhere into that range. I wouldn't want to get much more greedy than that at the moment. That really, that high there, which was previous day's high and yesterday's high, that propulsion gap is where that move kicked off today. That's where you'll probably get an add, which will be the previous resistance turn support. Not amazing at the moment. I was about to close my US dollar CAD positions if it go one more pip. Now it came all the way back. Yep, it has. I've got 2 positions on that. That's a manual. I took a manual on that because I didn't think the EA was going to get it in. And it has, and now it's gone back down. That's not good. I have to close that and a loss. You have to take a 0.5% on that. I'll take it down at ADR. 0.5%. Yeah. So this obviously looks like this Canadian dollar move has undone itself. So the negative news on the CAD, they've just completely undone it. But it's only pulled back. So it might push back up. So if you look at these on a 5 minute, it's just a quick recovery. So there's the news. So it's just a quick A-shaped recovery, but it does look like it's potentially bouncing again. So we might get some more Canadian dollar weakness. However, obviously, the same thing with this US dollar CAD. Canadian dollar weakness equals US weakness equals this one just struggles to push back. everything else will push back against the Canadian dollar as it weakens. Because the US dollar weakens with the Canadian dollar, it just kind of gets stuck. Same as Aussie New Zealand. It's exactly the same thing. It's annoying when you have news on something else, it's fine. It's just when you get news on these two. So perfect A-shaped recovery, same as that. Did you already test the green candle long, red candle short ORB from yesterday? Yeah. Yeah, I've only just started testing it though. And I'm only testing it at the moment on the DAX, and I'm using slow down. So I'm using an ADR based stop. So I'm using a 1/10 of ADR as a stop loss instead of opposite end of candle. So as you can see there, so that's the opening candle. So there's your opening 5-minute range. It was green, so it immediately took a buy, closed it out at end of session, which is 2 o'clock for Frankfurt. It's not actually 2 o'clock for Frankfurt. So this is the quandary. When they were testing that in that paper, when they did the research, they were testing the US indices, which obviously open at 2:30. The US indices close end of day. If you're going to trade this on the DAX, which is what I'm testing on, where do you close? Before the New York Open or at the New York close? Because one of two things is going to happen. You're either going to get in New York, so you get the Frankfurt move and then you get the US move, right? So the Frankfurt move will either, if it's bullish, get continued in New York or reversed in New York or go sideways in New York. So if you use the New York close as the end of session close, which is what they said was the most profitable, when you're using the DAX, do you wait for that New York close or do you use the close before New York? That's the question. So if there's two scenarios that are profitable and one scenario that isn't. So I'm assuming probably holding to end of New York is a good idea. So this is a prime example. Frankfurt Open, New York Open, rotation day. So on a rotation day in New York, it's not going to have much difference if you close it there or close it at the end. On a bull day in New York, trend day, you're going to get double bubble on your DAX trades. On a bear day reversal of the Frankfurt move, you are going to stop out with a loss. So it seems to me that there's probably two scenarios which are profitable to hold end of day rather than end of session. I haven't tested any of this, but that's what it seems to me. Euro odd, weekly range just hit. So there you can see there, that one opened up. We were bearish, took a short, went short a little bit, came back up, flipped, went the other way. There are ways to take advantage of this. We know the 5-minute ORB, for example. So there's lots of additional testing I'm going to do. Euro odd 125 ADR. This is Australian dollar strength. This is not good. Not good at all. It's New Zealand dollar strength as well. But it's rallying the Aussie. This is the problem. And the Aussie is a bigger economy. So therefore, the Aussie New Zealand gets rallied more than the New Zealand dollar does. And it brings our Aussie New Zealand back to where we started. Anyway, so there you go. So there's your 5-minute opening range. Candle was bullish. Enter immediately long. Closed at end of session. Close there. So end of day close was all the way down here. So you see, this is the scenario. This is really the end of the Frankfurt session. This is where the New York session takes over and starts trading the US indices. The US indices have stock sector purchases made in the same way as the Frankfurt session does, except there's 3 of them. So the movement in the US when it's bearish will affect the DAX. So do you get out when the Europeans have just gone, that's our move for the day? Or do you wait? If you wait for the US and they decide actually it's a bear day, that profit is all gone and turned into a loss. However, if they do the opposite, it makes a massive, much, much bigger profit. So this all needs to be tested. So there's a loss, bull candle, long, stopped out. Rotation day. Absolutely no way of making money in a rotation day unless you sell the high and buy the low. Except you don't know it's a rotation day until it's already sold the high and bought the low. By then it's too late. Suspected spam. So you just couldn't have made money that day. It's just no day, is it? Stop out on that one. Again, big range. These are things to test. If the candle is that big, do we really want to try and get in on it? Because a lot of the movement's already been done. The ADR on this at that point was 179 pips. This put in 71, a third of an ADR in one candle at the open. Do we really want to trade those sessions? This is all stuff that needs to be tested, which I've already tested with the initial ORB, but this is obviously a different strategy. And then you get days like that. Just do that. Yeah, so you can't see it. Put my head in the way again. So win, loss, win, loss, loss, win. Because we're not using a TP, we're not limiting our upside, but we are always limiting our downside. The winners are always going to be, most of the time, big winners. That's the edge of the strategy. The chop day, not a hope in hell making money that day. That day, beautiful. Pretty much the same P&L there, but yeah, New York session on that day. There's New York Open, bang. Did nothing. So rotation day, you would have closed out there. So you would have made that much profit instead of that much profit. There's a lot of testing to be done on it, but the edge is there. Over the year I've tested at random. I just picked basically the exact strategy conditions they stipulated based on ADR rather than on opposite candle for a stop loss. It made a nice profit, but it did have a large stagnation period, which I think can be worked on. Look at that. You see, this is where that strategy fails, but the ORB absolutely killed it that day. So the 5-minute ORB strategy, you had one stop out, one entry, one massive, massive, massive profit. Same there. You had one entry, stop out long, and then you just, it's horses for courses. It really is. But I'm just keen to test their version of it. Because there are so many variations of it. There's days where it's just going to kill it. We're up 16 grand in 17 days. My version is up 16 grand in 9 days so far, isn't it? That we've been testing in here. And that's on 4 instruments. This is only testing 1 instrument. So imagine replicating this on 4 instruments, all 4 instruments doing the same thing on the same day. It's a 25 grand day on a 100K account. You only need one of these a month. That's it. You're done. If you spend 5 grand on evaluations with prop firms and you had one day where all 4 of them went on a breakout, you're done. That's it. You're done for the month. You're done for the quarter. This is what they're saying with that strategy paper that they wrote. It's a long-term investment. They tested it over 8 years and it returned 1,600%. It had a lot of downs and it had a lot of stagnation. But when it worked, my God, did it work. That's when you get paid. When the market goes, we're trending today. We've just had a NASDAQ move because Spotify released its earnings. You're on that. You've got a 15 to 1. So if the last 15 trades went sideways, that one trade undoes that lot in one go. So you're going to live through something like that, and then it's going to go pop, pop, pop. because you're going to get multiple days on the trot rallying, aren't you, on the indices? That's what they do. New Zealand dollar Swiss, 150. This looks like euro weakness coming through. This is euro weakness. Swiss franc will be coming, everything will be pushing against the Swiss franc at the moment. So that bodes well for Aussie New Zealand because this movement is being manipulated on the euro and the Swiss at the moment, which takes the pressure off the Australian dollar. If we can keep that New Zealand dollar pressure up, we could get another leg down today. They've pushed back up. As you can see, we've got the rejection. So hopefully this is high, low, lower high, lower low, lower high, drop. See, we need a bear candle now. Or just, you know, hold down here. See, what we've been doing is since we put in that peak formation high, we've been gradually making our way down in the day. Not the bulls can't get control back. Bears gradually making their way back down. Yeah, if we can hold that and then continue that, it will just fall over because the guys that are long on this will just give up the ghost and it will just collapse. See, look, long, totally right. The stop was wrong there. So stop other end of candle. Again, I haven't tested stop other end of candle because they recommended using an ADR stop. Stop other end of candle would have meant you'd have caught that. Again, as we know, there's never going to be a perfect stop that works all the time. That pop. 4 losers in a row. Bang. New high. 1 loser. Bang. New high. 120k. 19 days. Yeah, you just made 20 grand. If this is a proper count, you've just made 20 grand. 20 trading days in a month. This is day 19. Let's see what day 20 brought. Stop out. Yeah. 20 grand. 20,500 times 75%. I'll take 15 grand. Thank you very much. Not going to happen every month, is it? But you only need it to happen once. Yeah, average earnings for people, 30, 40 grand. It's just done half of that in a month. One instrument. We haven't looked at the NASDAQ, the DOW, or the S&P. That's just the DAX. It's not even designed to work on the DAX. So, you know, it's a work in progress. Unfortunately, it's a work in progress which is interfering with my other work in progress, which is currently being backtested. So I've got loads on the go at the moment. And these are all profitable as well. We've run 625 simulations on this now. They're all profitable. Everything here is profitable. 15% drawdown. Big return, 90 grand return. Again, similar returns. I'm getting similar returns with my versions of the strategy that they're getting with their versions of the strategy. But I'm really keen to try theirs because the NASDAQ is much more volatile than the Dow, as you can see. Yeah, as the DAX rather. So the DAX, the NASDAQ moves a lot faster at the open. And when it wants to go for the day, obviously, you know, this is the thing. I haven't even tested TP targets on it yet. TP targets on that might make it even more profitable. Let's see. Oh, there's a 5-to-1 today as well. Look, that's really annoying. Look, stopped out on the long, on the whipsaw. It went on the 5-minute ORB. There's 1.5R. There's 5R. The stop loss today was the killer, which is what I'm optimizing for in here. Yeah, so I'm optimizing for different ORB trailers. So all starting to come down now. We might get some US dollar strength coming through. Starting to push a little bit, the US. TP on that H1 M5 in, out, same day. Trade was taken at the, look at that. You can see it, yeah, my head's not there. So trade taken, market was nowhere near it. You, depending on your broker, you would have got in there. Same result. Did you already have it set for both sides? Thing is, if I get whipped, my broker takes both positions out due to the hedging regulations. Yeah, you need to run 2 accounts, don't you? That's the thing. Is 5% ADR too tight for you? I haven't tested it yet. I haven't tested the 5%. I only built it this morning, so I've literally, the only test I've done on it, wrong one. The only test I've got running on it is it's this down here. Can't really see, but yeah, I'm risking 1% with 0.1 ADR. So that's what my testing is at the moment. Because the white paper that they published said in here, the initial testing was with the stop underneath the low of the opening candle. Yeah, so the initial test was that is your stop loss. So that's your opening candle. Your stop goes under the opening candle and you enter long. Yeah. Then the second variation of it, which was down here, where they then started trying to optimize the strategy. They then moved over to an ADR-based stop somewhere. Yeah, so there you go. So percentage, stop as a percentage of ADR. I'm testing that one, that column there. Because if you look at where the bulk of the profit comes, which is here, yeah, this is a walk forward optimization or an optimization graph, basically. So this is where the bulk of the profit occurs. So the bulk of the profit occurs with somewhere between a 15 to a 5% stop of ADR and a 6R target to end of day. But you see, this is the end of day with the 5. This is the end of day with 5% ADR stop. This is the end of day with 10% ADR stop. You actually get better results if you go for a 9 or 10 TP or a 6R TP. I think what will happen, which is what needs to be tested, is if you use anything in that area, but exclude that and don't use an end of day, I think what you'll find is that your strike rate will increase because you will easily achieve a 6R return. So think about what you're doing. If you're risking 1/10 of an ADR on your stop, and the thing moves obviously an ADR, yeah. So what we're asking it to do, if you use a 5R target, we're asking it to move 1/3 of an ADR. Easy, no problem. Do that in 2 candles at the open. A 6R return is going to be 30% of its average daily range. So so somewhere around here is what I'm saying is it's an easy to hit target. So I think you'll find you'll get a massive strike rate increase there, which may well flatten out that profit curve even further. So it's all got to be tested, but yeah, it's looking pretty good. ADR is obviously the way to go. That's what I use all the time. So I'm much more interested in that than using lower candles. And obviously body size as well is something I'm testing. So at the moment I'm testing a 5 pip body. So if it's below a 5 pip body, I determine it to be either a spinning top or a doji. I'm not interested in spinning top or doji entries because there's no directional bias. So they get filtered out on those days, which is exactly what we had today. Yeah. So prime example today, we had a spinning top. Yeah, ORB on the 5 minute. Look what happened. Bang. When you get those. So what I'm going to do with the EA is I'm going to say, which is what it's doing at the moment, is if you don't get those, don't take a trade. What I'm going to do is say, if you get those, don't take this type of trade. Go back to an ORB pending order trade because I want to catch the breakout. Because what's happening here is the market's going, oh, I don't know which way to go. So it's like, all right, fine. When you've decided and made your mind up, take me with you. So if you get a shooting star, if you get a spinning top or a doji on the opening range breakout, we'll basically, I'm not on the chart, I'm not on the screen, am I? We'll basically take a traditional ORB, 5 minute ORB. Yeah, all needs to be tested. So there's loads of testing to do with it. Close and re-entry, I've tried that, doesn't work. Chops you to death. The days where it doesn't work, a close and re-entry doesn't work all day. You just get max loss. So when I ran I scrapped that idea very quick. That close and re-entry, couldn't make it work. It sounded like a great idea in my head, but then I realized when I was watching it trade, the amount of days you get rotation days is somewhere about 2 to 3 days. It's at least 1 or 2 days a week. You're going to get a rotation day. Those days are going to be max loss days pretty much every time. So they always wipe out the profits. It didn't work. The inside bar breakout recovery system that I built instead of that is much more efficient because we know that we don't know on a rotation day which way it's going to go. So we'll wait for it to decide. And an inside bar is the first indecision candle that usually gets broken. Because what we do is we whipsaw. So we try for a new high, we don't make it. We try for a new low, we don't make it. None of those are inside bars. The first time we go for a new high, don't make it, go for a new low, don't make it, and then we sit there and go, actually, let's wait a minute. That's when we want to pounce back. That's what happened yesterday. So we missed both opening range breaks to the up and down. We waited for an inside bar. We took the inside bar break to the downside and got a recovery. Actually, that was today, wasn't it? What am I talking about? That's today. Yeah. So complete indecision and look at it. See, spinning top. Should not have taken. Well, actually, we did. That's exactly when we should take it. But we got stop out, stop out. So we waited for the inside bar, which is the next candle, took the short, shorts won. There's method in the madness, but the madness is always going to be there because it's never, ever going to do what you want every day. So it's just finding out what is the majority. We can get the majority of days profitable. That's it. But it's becoming very evident you need to let this run. Same as the ORB strategy. The ORB strategy is a breakout strategy, trend strategy. If you don't let it trend, you're not going to make money. You've got to let it go, let it run. I got from eBay a month ago for $5.99 a monster file of bots and trading systems. Insane, mostly crap. Found a few gems, but mostly a waste of time. Yeah, I've bought those in the past. Yeah, you spend hours and hours and hours and hours of your life playing with those things. The trouble is you don't understand what most of them do, those EAs that you buy. And also be careful. You don't know what those EAs are doing. For all you know, they're harvesting your account data and sending it somewhere else. ORB paper uses leveraged ETFs. Yeah, they're exactly the same as a normal ETF. It's like trading a micro. So if you trade the NASDAQ, you can trade if you trade the NQ, which is the NASDAQ, you can trade the MNQ, which is the micro NASDAQ. It just means that every tick is worth $5 instead of $10, or 50 cents instead of $5. So that way you will get larger lot size on. So yes, we might need to look at that. Some brokers impose a 200 lot limit. Some brokers don't. There's always a way around it. And if you're going to automate this on futures, which is what they tested on, you can't do it in MT4, obviously, because they're true futures. David, is that strategy taking orders at the bottom or top of the body of the candles instead of the highs and lows? It takes an entry as soon as the candle closes. So that strategy, literally, as soon as that candle closes, opens an order in the direction of whatever that was. So basically, all the logic is if the 5-minute ORB is green, go long. If it's short, if it's red, go short. Don't wait for anything. It's not an opening range breakout. It's literally an opening range decision based on the initial cash balance. It's flipping a coin. At the end of the day, all it's doing is flipping a coin, using a tight stop and letting the winners run. Exactly what you should do in trading. If you're scalping and using a stop loss, the only way to make money is to wait for those big winners. The problem is you can't. So you've got to let this thing go automated. If you look at it, you'll close it out. You'll go, oh, wow, this is looking amazing. Bearish engulfing. Shut it. Bang. There goes your edge. The trouble with stop loss strategies, holding. That's the edge, holding. So if you can't hold, if you don't look at it, you won't have a problem. If you look at it, you'll have a problem. Euro is just garbage right now. Yeah, I know. I don't know why. Fundamentals are bullish. Interest rates have gone up. Lagarde is promising more interest rates. Everything that's ever come out of anybody's mouth about it is bullish, yet it's collapsing. I have no idea why. Doesn't make sense at the moment. It's just a squeeze. Does it take continuous trades? No, it just takes one a day. That's it. You take a trade. If it doesn't work, you go and do something else. It's a simple strategy. All the best strategies in the world are the simplest ones. Yeah. Warren Buffett's strategy is every time you get 3 down days on the S&P, buy it. Doesn't get any simpler than that. What's the day? Second day. Is it bullish? Yeah. All right. Sit here. Wait. 3 weeks later. We've had 3 down days, Warren. Okay. Press the buy button. It makes 8 to 12% a year. That. Nothing complicated. When the S&P pulls back, just buy it because it's going up. Why is it going up? Because everybody's stock prices increase. If they don't increase, they lose their jobs. Very simple strategy. This is very simple. The market's opened. Did it go bullish? Yeah. All right. Buy it. Some days it's going to go. Other days it's not. The days it goes, it's going to go way more than it doesn't. Because it doesn't, because it stops you out. When it does go, it makes you 10R. No, nothing clever. There's nothing mathematical in there that is going, oh, because this did that, that's done that, this indicator does this. It's literally green candle, buy it. That's as simple as it gets. But it makes a fortune. 1,600% return on the NASDAQ in their testing. But this is why I'm building it, because I don't trust anybody. If I can prove it, I will use it. Does it 3R just sit on the trailer? Good one, Brian. What do I think about the NAS? Well, I don't know. Today, it's gone long, hasn't it? Pulling back. It's just returned to origin. You've missed the NAS. It's gone. Indices you trade at the open. Where it's going after this, nobody knows. It's Friday. I would estimate you're probably going to get that. It's Friday. They're not going around. They're going to the pub. When will the new ORB really? I don't know when it's finished. I've just started a new track of testing, so weeks probably. I don't know. You can do everything that's done on here with the ORB, apart from inside bar breakouts. You can do inside bar breakouts with the Price Action Toolkit. Actually, you can't. You can only do 2 IBs. But I don't know, is the honest answer. I need to test it. I'm not going to chuck it out there just because you want it. I'm going to chuck it out there if it works. I haven't tested it thoroughly enough. This is the first proper test on the finished version. It's running 1,000 permutation tests. So far, it's done 600 and all 600 are profitable. So if it runs 1,000 of those and they're profitable, I will then take those 1,000 permutations and run them out of sample. If those out of sample tests are profitable, I will then run cross instrument tests. So I will take those system parameters on here that work, and I will test them on the NASDAQ, the S&P, and the Dow. If they come back with positive results, it's robust as you can get, and I'll use it and I'll trade it. And then obviously I can put it out there. But until I've tested thoroughly, I haven't even done out of sample testing. This is literally just testing a year. So I haven't tested it out of sample yet. So I could take all of these system parameters that are profitable, and I might find that 90% of these don't work out of sample. I'd be very surprised if they don't, because they all do in sample. The whole idea of a system parameter permutation test is to break it. So you come up with a strategy and you go, right, okay, that looks good. But what if you didn't close everything at 4.5 grand, you didn't have a TP of that, and you didn't delete the pending orders? What happens if you didn't take the inside bars, and if you didn't close at the stop, and if you didn't use that size of trailer? Then what would happen? So I'm testing all 1,000 combinations of those things happening. Every single one of them comes back profitable. You know that it doesn't matter what you do. You can basically put the EA on there, close your eyes and pick something at random and press the button, and it will make you money. That's what a robust system has to do. So that's what this test is doing, but it's only doing it on the initial data sample. So what I've now got to do is test it on a different data sample on a different period of time. So my out of sample test will be from the beginning of January until today, which is 6 months. And it will be the 2021 to 2022 year. If it produces good results here and there, then it gets moved on to the NASDAQ and the other indices. Because a strategy, a robust strategy, has to be able to be run on multiple instruments. If you are curve fitting a strategy, which is why you see all these crap strategies out there, the gold scalper. If it only works on gold, it's not robust, is it? A strategy that works in a market consisting of people that buy and sell stuff from each other, has to work in all markets where people buy and sell stuff from each other. If it doesn't, it's not robust. If you can't get it robust in one market, you're not going to get it robust in the others, are you? So you've got to test it on different markets. If you've got a strategy that only works in one market, it's curve fit. A curve fit strategy will fail immediately. When you're using the average daily range of an instrument, it doesn't matter what the instrument is, it will work. Yeah. And we are using the initial open of an instrument. Therefore, it doesn't matter which instrument you put it on, they all have an initial open. If we're using the initial open as our risk variance, then it doesn't matter which instrument you put it on, as long as it's an index, because it's got to have an open. So it's got to be tested. I can't just put something out there because it's looking good. It needs to be good. I don't want to stick any money in it if it's not going to work. But to answer your question, which was obviously a long variation of it, probably a week or so. I'll get as much testing as I can get done this weekend. But look at this test. This is one test, yeah? This is taking 28 hours. This one test on one instrument is taking me 28 hours. I've got to replicate this over 2 different time periods now and then cross 4 instruments. So, you know, I've got a minimum of 4 or 5 days worth of simulation testing, although I will run this on multiple MT4s. Speed it up. David, and the stop loss is 1/3 of an ADR or a half. On that one, it was 1/10 of an ADR. Yeah, so that's you're talking about the ORB paper. Yeah, this thing. Yeah, the stop loss was 1/10 of an ADR. Yeah. Stop as percent of ADR, 5% of the average daily range, 10%, 15%, 20%, 25%. Yeah. The beauty of it is all of them, every variation, and this is what I've just been talking about. Every variation they ran with anything from a 5 to a 100% stop of ADR, and any target from a 1R to just closing it at the end of the day, Every system parameter permutation came back as a positive result. That is what system parameter permutation is for. That's what I'm running right now that you're seeing there. So I'm running, sorry, yeah, that's on my EA, not this. This is what the test I'm running here is on the other version of the EA. Yeah, there's too many things going on. But I'm going to concentrate on that section there. And then I'm going to run additional tests on that. But I know that everything else works anyway, so it doesn't matter. But it's a small percent. The purpose of this small is when you get that opening range, the idea is we've had a bull candle. Yeah. So the market's gone long. So go with the momentum that has just opened, right? The smaller your stop loss, the more likelihood of you getting stopped out, but the higher the lot size you get on. So if you have a very tiny stop loss, you're going to get more lots on. So when this thing moves, you're going to make more money. That's why they made 1,600% profit. You know, they took it from 25K to 6 million because it was literally, I'm risking such a small amount with such a large lot size. You will stop me out and I will lose $1,000 or whatever it may be on your account size. That's fine. But when we go, I ran a test on this running on the 5, right? And it made $38,000 on one trade. Because what happened was the opening candle went in like that. It placed the order there. The stop was literally there. That's the 5-minute opening range. And then the next candle went like that. And then it went like that, like that, like that. And it went off on a trend day. Yeah, it had ridiculous lot size on. That was $1,000 worth of risk. It did something like a 30, 40 R move. Made 30,000 plus in one trade, risking just $1,000. How many times do you think that's going to get stopped out? Your strike rate is going to be 5%. But do you care when you're making $36,000 in one trade? Imagine running that on a prop. They would be coming back to you and going, we can't pay you. Yeah, so there's the profit curve. Look, 25, 6.4 million. That is running off of a 5 to 10% variance. Stop placed at 5% of the 14-day ADR. Don't forget, this is also compounding. So as you get up to these levels on a 1.6 million account and you're risking, your lot sizing starts down here at 200 lots. What lot size do you think you're putting on up there? I don't think you'll find a broker. And this is why I don't trust any EA that has a profit curve that goes like that. It looks great on paper and great on demo. You will never get the lot size on. Your broker won't even allow it. Too much. You won't even get trades on up there. So I'm running tests based on a specific dollar risk because you won't get that profit curve. You will never make that. You'd have to have a broker. I mean, you'd have to have a professional brokerage account to even get the sizing on there. You wouldn't be able to do it. You'd have to be registered. Need to rent some time on the supercomputer. Yeah, I mean, I could run it. I could build it for MT5 and then run it on MT5, and then I could use my machine as a server for MT5 and run all 12 cores. But I don't trust MT5 data. I don't trust it. I don't know where it comes from. I don't know how it gets there. I need to have verified data, and MT4 is the only way to do that. So, would a zone recovery option be worth considering? And I don't know. I don't know anything that's to do with martingale. You're going to find, I think this year, all the prop firms are going to ban anything that uses martingale derivatives. Half of them already have. So if you try and position trade, I don't think they'll let you do it. Any lot size that is taken above the initial lot size will be deemed as martingale and they will stop it. So I'm not even going to go down that route. I don't think you'll be allowed, unfortunately. But I'm going to get my version done first, and then I'm going to run further tests on this other version. And I might run multiple versions of it. I don't know. I'll see. But the original ORB EA is working absolutely fine. It's made some fantastic money this week. So, I'm trying to improve on perfection as far as I'm concerned. And I'm sure there is a way, but you just got to be careful that you don't squeeze it so far that you curve fit it to such an extent that you never replicate those results. You've got to try and keep it as simple as possible. And the reason it attracts me to that document and that version of the ORB is it is as simple as it gets. Like literally binary. Was it green? Press that. Was it red? Press that. Hold it. Yeah. At a time, close it. It doesn't get any simpler than that, does it? And if you can produce something like that simple that makes a profit, out of sample test it and cross instrument test it, and they all generate results, that's you done. You don't have to do anything else. But I would be scared about putting my own money into it because you'd need a lot of it to make it. You could try and compound with it, I suppose, or you could do high risk. So you could look at the maximum drawdown and use that as your account balance. So, for example, here, to make 90 grand, you would have needed 30 grand in your account. To make 80 grand there, you'd have needed 34 grand. So if you look at all the system parameter permutations run so far with this version of the EA, the maximum drawdown you will have experienced with any combination would be 50K, and you would have made $37,000 profit. So worst case scenario, if you had $100,000, you put it in an account and you ran the very worst possible version of the EA, you would have lost 51,000, but you still would have made money. You still would have come out of the end of the year as net positive. So you could have not gone with 50. You could have not gone with 100. You could have used 50. In which case, there's an argument for not using 5% risk per trade. There's an argument for using 1% risk per trade and making twice as much money on a 100K account. But you will draw down to virtually bankrupt on it, which means you wouldn't have the margin, you wouldn't get the leverage. There's always a problem. Always a problem. So this is what testing's for, to find where the problems lie. So, you are going to draw down. You might only make 10 grand a year out of a 100 grand account. And if you haven't got 100 grand, it doesn't matter, does it? But if you're trying to trade this on prop, there are only a certain number of set files that are actually going to be usable. And they're also going to blow accounts. It isn't going to work all the time. Even on prop, you're going to blow it. Every single one of these blows a prop account. Every single one of them. At some point. The lowest possible drawdown is 10%, which will survive, but you'll only make 30 grand a year. So if you're running this on 3 prop accounts, you would just about survive on all 3 of them, and you would only make 100 grand a year. Sounds hell, doesn't it? But as we're seeing, you're not necessarily going to get all the trades executed. So you're going to miss, like we lost $3,200 today because we didn't get executed on the NASDAQ. Other days you will get positive slippage and make more than you think you should have done. It's all swings and roundabouts. It's only testing. It's just random stuff. So work needed. If I remember correctly, if you're stopped out, it's supposed to be a 0.5 of the original until recovery. I don't know. I don't do anything like that. All my trades are 0.5% risk. Everything is 0.5% risk. I haven't done anything more clever than that. Everything here on this test is 0.5%. $500 left. Every single trade risks $500, which is 0.5% on 100K. Times 2, obviously, because it takes 2 trades each time. One quick one runner. And again, I haven't tested the runner scenario on the other version. I haven't tested, let's take 2 trades and let's have a TP on one and have the other one as a runner. that might increase that strategy. All they've done, that ORB paper, they've just run a test on the original ORB strategy. No variation. So I can probably take that initial and massively increase it. But yeah, I'm not going to do any clever. The more complicated you make it, the least chance you've got of replicating it in the future, because those loss recovery trades you've taken in the past, you took them because of you needed to recover losses. If those losses don't appear in the same order in forward testing, the loss recovery system that made the profit won't be effective in the future. Therefore, you won't get the same results as you got in your back testing. Back testing has got to be done super, super, super simple and strict. Anything clever in back testing. This is why the market reversal alert CA does not have aggressive drawdown control scenarios built into it. I tried and I tested and I couldn't get anything profitable out of sample. And I realized it's because when I had to put big lot sizing in, that was what was making the money, which is what aggressive drawdown control is there to do. However, in the future, those scenarios that needed those ones weren't replicated out of sample. So you got completely different results. You remove aggressive drawdown, i.e. loss recovery system, martingale systems, all that sort of stuff. And you can't be wrong, can it? If you did this at that point with that amount of money and risked that happened. If you did that and then there was 13 calculations going on so that you adjusted the lot size based on how many losses you'd had in a row and that's never going to happen again in the future. Utterly useless. Just breaks everything. Just breaks all the maths, breaks all the calculations, and breaks all the stability of the testing that you're running. So it doesn't work. In my experience anyway, but I mean, you know, doing it in the real world is different, isn't it? So, right. I will leave you there. The Dow has stopped. So they've put the brakes on, whipped everybody's money, and they're just holding there at the moment. So we might basically just be stuck today. Aussie New Zealand has stopped. Oops, wrong one. So we've slowed down on that. So we've pulled straight back into resistance and we're holding. So hopefully that was just a pullback on that leg, 50% retracement, and we're going to look for the new leg down. So monitor that. So I will be back. My God, US dollar CAD looks going into drawdown as well. Everything's squeezy at the minute. So I'll be back on Monday at same time, 7:50, 2:20 in the afternoon. And we will see how we get on over Monday, Tuesday with these. But hopefully we'll start to see some of these moves I'm picking ahead of the European rates next week. So have a good weekend. I'll be in Telegram if you need me. Otherwise, have a good one, and I'll see you next week.